Hello, options traders. Steve Gans here on Election Day in the United States in 2024. And I want to share a conceptual trade here with you. Now, this is a trade that I'm personally attempting to get into, but I am not going to accept less than a really good premium to get into this trade just because of the volatility and risk that is involved in it. But I wanted to show you a really weird anomaly and then kind of walk through what I assume is happening here. So I'm looking at a trade in DJT, which is Donald Trump's social media company. If we look at a chart of DJT, we can see that this thing has been all over the board in the last month. It's been as low as about $12 and as high as about $55. Now that's all within the month of October. That's just crazy. Now, when you have massive swings like that, you're also going to have massive volatility that goes along with those swings. And I want to show you something here because this is a bit of an anomaly. You don't normally see this. And the anomaly is that you can see I'm looking at a condor here that is 5 points wide on the downside, 10 points wide on the upper side. But look how far away my strikes are from the current money. We're trading at 39. I'm putting this strike all the way out here at 55, 16 points above where the current market is. And if we take a look at this chart, it's also at our prior highs. I get it, this was a higher point here, but it was at prior recent highs. So my short strike is above that. And then if we take a look at the downside, I've got the downside all the way down here at 30, but I've also made this downside narrower so that if DJT ends up coming back and visiting this, $20 or $15 range or so in the near future, my loss to the downside is not as much. So, and of course, I can adjust that wherever I want. The further out I go, of course, the less premium I'm going to take in on this. But the thing I want you to note here, let's take a look at the volatility here. This strike is at 700% volatility, and when it's that far away, and this one is at 636% when it's that far away. Now, normally, extremely high volatility, where we expect the volatility to maybe drop in the short term after whatever our event is, comes to completion, you would expect an IV drop and that would happen rather quickly and bring profitability into this trade. Now, here's the odd part. Let's look at the max loss here on the November 8th strikes, or November 8th Condor. That's 3 days from now. Our max loss is roughly 3,100, max profit 1,800. Now, what if I go out further in time? My max loss is 2,800 now. My max profit is 2,200. So giving this actually more time allows this to maybe digest a little further, allows me as a trader to be able to have time to potentially adjust it, and I have a lower risk to reward ratio as I go out further in time on this. And the volatility here is still pretty darn high for being that far out. So I want to take a look again. Personally, I'm working to get a fill on this side of the equation. And then after I get that fill, I'm going to work to get this side. And I may not get filled. I'm only willing to accept a premium price on both sides here, ideally trying to get a fill to where my left side has no risk in it. Right now on this trade, it has $287 in risk to the downside if DJT went back down to that $10 range or so. I'm trying to get fills on both of these in a way that I wouldn't even have that risk. But for the sake of argument right now, I'm going to assume that I'm able to get into this position at the mid prices that I'm currently at. And I have set this up skewed to the downside for two reasons. One, if Trump does not win the election, I do believe this will drop dramatically. If he does win the election, certainly there will be a pop in it. but it also just simply isn't a profitable company at this point. That doesn't mean it won't become profitable at some point, but right now, as people start to realize that they're in a company that is burning through a lot of cash, doesn't have many advertisers, etc., at least again at this point, that this may very well, over a period of time, stay in this general range while they attempt to get some profitability into the company. So that's my theory behind this, right, wrong, or otherwise. Everyone may have a totally different opinion on this. And if your opinion is totally different, of course, you could skew this trade in a different way. But that's how I'm looking to put this trade on. So I'm going to save this trade, and this will be part of the start to finish series. And again, I'm just taking mid prices on this right now. I will copy the link. I'll share it down below so that everybody can open this up themselves, adjust it however you see fit, put in your own premise or your own theory on this trade and see how that plays out. Now, something I do want you to notice that I just noticed in the background here is that I went at mid price, and you could see because I just accepted a fill at mid price and bid-ask spreads are wide, I am instantly down $125 on this trade based on the simple math. Again, that's because the bid-ask spreads are quite wide on some of these. We can see here we're $9.95 to $10.75. Now, on my live trade, I am working this so that if I get filled, I am getting filled at a very favorable price. I am getting filled at my ask price, which means that I'm not going to accept this wide bid-ask spread when I get into the trade. For the sake of argument here, though, I don't know where my fill is going to be, so I went ahead and demonstrated this knowing that I'm going to be underwater right at the start here because of those wide bid-ask spreads. This, by the way, is why you should never go out on a volatile stock and do a market order, or on an options trade and do a market order. You should always take a look and see how wide is that bid-ask spread, and then you put your price at a point that you're at least to the favorable end of that bid-ask spread. So I hope you all find this interesting. We'll check in on this and kind of see what pans out over the next week or two. I truly don't know, obviously, but I wanted to at least show what's occurring in something with extremely high IV and how you could consider playing that. But again, you have to know and understand that this thing can have massive, massive swings in a very short amount of time. So that's it for now, everyone. See you later.